Here's 40 years of an investing wisdom in 3 minutes, and that's quite a task. But after surviving crashes and bubbles and everything in between, here's what I think. After 40 years, you have to know yourself. That's the first thing. And frankly, you don't know that when you're 22. Sorry, kids, when you come out of school, college, or 25 when you come out with your MBA, you really don't know anything. And so you have to take some pain. You have to lose money. You have to make mistakes, and that doesn't sound very fun, and it isn't, but that's how you realize I don't want to ever touch that stock again, or here is my blind spot, or here's an analyst I'm never going to talk to again, or here's a company that's dishonest, so I'm never going to talk to again. So those are just things that you have to go over time. My personality, investing personality, really comes from my experience. I came out college in 86, went to the training program in March of 87, and if I had a time machine, I'd go back and punch myself in the face. The hubris that I exhibited, it was stunning. We were just going to make money, and it was Gordon Gekko, and this was going to be easy. We're capitalists. We're just going to make money. Well, then October 87 happened, and didn't know, October 19th, the stock market went down 22% in a day, and they stopped trading just because they couldn't price things. It was that bad. And I remember I was a stockbroker, and I watched the the people that had the battle scars say, I'm going to go for a 4-martini lunch, and I'm going to hide from my clients. And I was just too dumb and naive. So I kept talking to my clients, and I didn't have much of a book, so it didn't really take a long time or a lot of effort. But you have to realize that what human beings can do, they can sell stocks indiscriminately when they panic. And panics, I know for the last 17 years, we really haven't seen much of a panic, maybe during COVID, first part of 2020. But again, the Fed bailed us out. So back in 87, it was different. What I learned back then was the technicians, the chartists, either made money or lost a lot less money than the fundamental analysts. And it struck me. And they were just watching the price action, watching the charts, watching the moving averages, and they got out and avoided most of the pain versus the people that said GE's a great company and I'm going to hold on to it. And GE went down 70%. I'm making that number up, but you get the idea. So that's my market wisdom. And again, I've said this in other places, admit your mistakes. And even if you think you're right, the market says you're at the wrong time, and you can buy it next week. If you're an individual investor, you can't do that when you're an institution by and large. So cut your losses, let your winners run, and frankly, be as best as you can, be dispassionate about what is working, and throw your opinions aside. Oh, semiconductors are cyclical, and so they should never trade at these valuations. Or I'll never touch energy because it's commodity based, and I can't control oil prices, or I can't predict oil prices. Or adopt those if they work for you. But I just think being almost jujitsu and letting the market's movements guide you as to where to go. I think that's what I've learned over 40 years. But the main thing is I never have big losses. I never lose a lot of money. I'm going to knock on wood, but I don't, because I just don't let things get out of hand. And what happens when you let your losses get out of hand is you spend 80% of your time on 20% of the stocks that are unproductive, and that really vicious cycle. If you don't have anything down more than 15%, you can concentrate on letting your winners run. So after 40 years, that's really about all I've learned. So I'm sorry I don't have books worth of insight there, but that's what I've learned over 40 years of Wall Street, of investing. And I hope it helps you, and I hope it makes your next 40 years very, very profitable and very, very joyful. I'll see you. Take care. Bye now.
Hi, I'm David Maris. If you like what you just heard, we've tracked every single pick we make on the show, every ticker, every thesis, every entry price, over 1,100 picks and counting. We put it together in a free report with our top 10 performers, the reasoning behind each one, and a preview of our full dashboard. If you want access, the link is in the description.